people are starting to understand the network effects, the incentive mechanisms of tokens, the network's effect of liquidity, and of having open networks. Basically, everything can be turned into a tokenized market. Then all of a sudden, you have a much more direct way to express viewpoints than you've ever had before.
Let's say it's 2030 or 2035. Do you see the majority of companies and brands have, let's say, their own layer twos, maybe their own tokens, and add more value to their brands and companies? Do you think that's the world we're headed to?
I think so.
This episode is brought to you by VeChain. VeChain is one of the top layer 1 enterprise blockchains in the crypto asset class, and they are getting adoption by many big brands and companies around the world who are building Web3 and decentralized application technologies. I've been a VET token holder for many years. In fact, I started investing in VeChain back in 2018. And some of the key features of the VeChain blockchain includes it's secure, affordable, scalable, fast, and sustainable. Some of the companies and brands working with VeChain include Givenchy, Walmart China, BMW, Boston Consulting Group, and many more. Most recently, they partnered with Dana White in the UFC, and Dana White even said recently that he purchased over $1 million of the VET token. And VeChain also recently launched staking, where you can stake the VET token and earn great rewards. So if you'd like to learn more about VeChain, go to vechain.org. Link will be in the description. Hey folks, welcome into the Thinking Crypto podcast. I'm your host, Tony Edward, and joining me today is Rob Hadick, who is the general partner at Dragonfly. And Dragonfly is a cross-border crypto venture fund. Rob, great to have you.
Thanks, Tony. Appreciate you inviting me on.
Yeah, absolutely. I'm looking forward to learning about the various investments that Dragonfly has in the crypto space. Most recently, Polymarket. There's some big news there. You guys, of course, are invested in that, so I want to dive into the details there. But let's kick it off with your background. Tell us a bit about where you're from and what's your professional background.
Yeah, so originally from outside Dayton, Ohio, in between Dayton and Cincinnati, in a bit of a rural part of the country. Grew up, I think the way a lot of people do in kind of suburban Midwest. Ended up making my way to New York after college when I was 22, and kind of have never left. So been now I'm in Brooklyn, but I've been kind of fell in love with the city the last 13, 14 years or so. Professionally, I came to New York to work in finance. I was had one of my first jobs was at Goldman, where I was doing essentially looking at a lot of internal M&A and looking at a lot of the kind of internal strategy of what Goldman was doing to start. So this was right after the global financial crisis. It was during a period of time where Goldman was really leaning into becoming a bank holding company and was really looking at consumer banking and low cost of capital solutions. And so I spent a lot of time thinking about kind of like consumer fintech at the time. And during that period of time was also this was call it early 2010s when Bitcoin started to gain a little bit of interest across Wall Street or across Silicon Valley. It had gone a little bit more mainstream. Bitcoin went to $300 and everybody was like, oh wow, this is amazing. How did this thing come out of thin air and become worth $300? And Goldman actually set up an initial kind of working group that was looking at crypto. It wasn't necessarily, hey, Goldman is going to be doing, all of the things they do today, and they're going to be involved in tokenization, but it was a little bit of a focus on things like maybe there is, support that we should be doing for like OTC for the clients. Maybe we should be thinking about how to, provide access, et cetera. And so I was involved in some of those early discussions at Goldman, and that was kind of my first foray into crypto and to Bitcoin, and got really interested. Then things at that period of time at Goldman where we started looking at tokenization. So people might remember the 2015, 2016 era when, I think there was the initial like digital ledger technology or DLTs for, putting like essentially a lot of tokenized things on chain, which obviously is still finally happening now, but was been a topic for a long time. And then, kind of spent I ended up leaving Goldman, spent a little bit of time in private equity, a little bit of time at a merchant bank looking at fintech, and really spent those number of years being interested in crypto and doing crypto on the side, but really focused on, fintech more broadly, and until until 2020 and 2021 when DeFi summer came around. And I looked around and I said, this is incredible. Like, what is happening with smart contracts? What is happening with reinventing, financial market infrastructure is something that I need to be a part of.
Mm.
And really took the dive in full time. First initially launching crypto at a big traditional hedge fund called Golden Tree Asset Management, which has about 50 billion of AUM. And then having met the folks at Dragonfly and realizing that I wanted to get even deeper and not just call it the crypto guy at a TradFi fund, but be, entirely at a crypto fund, and made the jump to become one of the GPs here at Dragonfly in early 22.
That's incredible. And Rob, your journey from TradFi to crypto is very analogous as to what's happening right now with some of the biggest names getting involved in crypto, even the big banks. What is it like looking back at when first discovered crypto, Goldman and things like that, and where we're at now? It seems all of Wall Street, all the banks, all these firms are jumping neck deep into crypto.
Yeah, the really interesting thing about it is that a lot of the themes have not changed, right? So I talked about it, right? Which is, okay, people understood that, when smart contracts were happening, when Ethereum was coming out, that theoretically you could reinvent the way money moves. It could be, programmatic. It could move instantaneously. It could, you had a fast finality, right? Like this is really interesting for also the ability to swap different asset classes, directly in a permissionless way or a permission way, but across actors who otherwise theoretically would not be interacting with each other. That story around internet money, around internet capital markets, like that story has been something that we've been focused on for, over a decade, right? But the infrastructure was not ready. The people understood that this could happen, that blockchains would enable this, but they did not understand, what we needed on the infrastructure layer was not yet ready, and that it would also take longer, I think, to build than people expected. And so it's been amazing to see that, the initial vision is now really actually happening, but the initial vision hasn't actually changed that much, which has also been interesting to see because people understood the benefits of the technology early on. We needed to get to a place where, we could start to actually achieve, those milestones. And so it in many ways reminds you of some of the early internet and some of the early writings of the internet. And I think it's quite analogous, but now that acceleration is really happening in terms of corporates and banks and just, everybody across, the financial sector and the payment sector, realizing that this is potentially, for many use cases, a better way to move value, to move money, to move information than the current legacy systems.
Talk to us a bit about, at the time when you were at Goldman Sachs and they were exploring these things. At one point, Larry Fink, for example, of BlackRock, called Bitcoin an index of money laundering. And they were saying, hey, the blockchain is great. We're going to use that to build. But they were looking to do more of a private permissioned blockchain versus public blockchains, right? But we've seen that flip. That they've kind of capitulated. Well, Bitcoin has a fit. It has the digital store of value component. And then we need to plug into public blockchains. What did you see along the way? Was that things were discussed at Goldman and so forth?
Yeah, absolutely. So you may remember, or maybe you don't, but I think it was 2015. A woman named Blythe Masters, who was at the time, she was like one of the 8 most senior people at JP Morgan, and she I think ran their consumer banking business, and she left JP Morgan to go run a thing called R3, or Digital Asset Holdings, right? Which was one of the first companies like providing these essentially these permission private blockchains. And she went on the front of Bloomberg, I think it was Bloomberg Business Week, and the headline was "Blockchain, not Bitcoin." Right, and all of the story across Wall Street at the time was that like blockchains were going to reinvent the way financial markets worked, but the tokens themselves were worthless crap that were being used on Silk Road and were being used, for money laundering. To your point, that story has flipped absolutely because people are starting to understand the network effects, the incentive mechanisms of tokens. People have started to understand the network's effect of liquidity and of having open networks, right? I think about it again. There were private versions of the internet, like intranets, right, that existed, and they served potentially a purpose, right? But the those purposes were limited, and they didn't accrue value in this way that you started to see the open internet, right, which grew exponentially, right? And we've seen the same things with blockchains, and we see the same things, I think, with all technology, is that once you allow for open, permissionless innovation on top of a network, the ability to accrue value is exponential, right? And so these, banks, these asset issuers like Larry Fink, they started to realize as these networks grew, as Ethereum grew, as Solana grew, as the others grew, that there would be more value that could accrue to them, and that if they were to support permissionless networks. Now, what have we seen happen in recent months is we've seen a lot of people say, okay, well, like I believe that story, but I also believe that I need to, necessarily control the execution environment of how I go and deploy. And so we've seen people like Robinhood say, well, I'm going to launch an L2 that shares security with Ethereum, but that allows me to have the ability to think through, how am I going to actually have the right validator set? What type of transactions am I going to prioritize? How do I think about accruing economic value to myself versus my customers? What are the types of things I don't want to operate on my blockchain? And I think we're going to continue to see a lot of that, right? We're going to continue to see a lot of people who say, I can build a better business utilizing and having interoperability with public blockchain. Mine will be public as well, but maybe I have a permissioned validator set, or I have a permissioned way to think about sequencing transactions, or at least incentivizing the type of transactions that I think are important for my business.
Yeah, that absolutely makes sense. It seems like it's going to be a hybrid approach, right? A mix of
Yep.
both. But the public blockchains, to your point, has the true network effects, and you have to plug into that to kind of get access to the world because these blockchains are running like a global market, real time, 24/7, 365.
Yeah, and there's shared infrastructure that, you don't want to reinvent, right? Like,
Yeah.
if Ethereum has all of the infrastructure available for basically anybody in the world to access it, to interact with it, to and all of the kind of service providers, whether it's the wallets, whether it's the compliance, whether it's the the on ramps, off ramps, anybody can also interact with this global permissionless ledger and pool of liquidity that people have built a number of different novel use cases on top of, and having access to that and being able to have interoperability with that adds a lot of value to grow exponentially. But you don't necessarily want to compete with building your execution environment for your business with a block space that like might also have a meme coin in it, or that doesn't allow you to think through how you arrange like for MEV, and how you arrange for economic sharing, doesn't allow you to have potential prioritization of certain types of transactions. Like those are the things that people are really worried about, and they're also worried about some regulatory concerns around whether or not you're included in like an OFAC sanctioned transaction, or validator set. But I think it's really more about like business reasons than it even is regulatory ones.
Oh, for sure. As you were saying that, I thought about the early days of the internet. My background's in search engine optimization, and I remember we would talk about if you're in a shared web hosting server or whatever it is, not being on the same server as other sites like gambling or adult sites or something like that. You don't want to be associated. So it is very similar comparisons there.
Yeah, and we're seeing a lot of people focused on those things,
Yeah.
and that's why I mean I think you've seen it, but Circle and Stripe and Robinhood and many more are continued to announce and continue to come out of the woodwork that says we want to do this. We just want to do it in a way that is optimized for our business.
So Rob, let's say it's 2030 or 2035. Do you see the majority of companies and brands have, let's say, their own layer two, or if it's like Avalanche, they have their own subnet, or Solana, whatever the mechanisms are, these companies have their own layer twos, maybe their own tokens, because there's the clarity, they can build more brand affinity, engage with their customers, have more retention, and add more value to their brands and companies. Do you think that's the world we're headed to?
I think so. Yeah, my belief is that most of these organizations, they want to control some subsection of how they interact with blockchains, and for them right now, it has been less about building an application and more about building an entire execution environment. It is easier today to launch a blockchain than it has ever been. The service providers, people, or even the chains like an Avalanche, like to your point, which you can launch your own L1 on top of. It is essentially like a piece of like enterprise softwares, SDKs, APIs that you can stand up pretty easily. Some companies say, hey, listen, like we're going to roll like our own new L1, right? Like for instance, when you think about Tempo and Stripe, the reason that works is because it's essentially a paradigms engineering team, right? And they are, deeply technical and they understand Wrath and like there's they have the technical expertise to do that. But the vast majority of these people are saying like, okay, well, I'm going to launch an L2 with, like a conduit or, somebody who does, roll up as a service. And I'm going to use, a DA layer like EigenDA or Celestia. And like I have kind of the service providers there who make this like super easy for me. Or, like we talked about Avalanche, where you can they essentially have a package for you that you could stand that up. Because that is so easy now, and because it looks a lot like enterprise software, and it allows for customizability that makes sense for people's business, I think most people are going to look at that and say, as long as I have interoperability with other, parts of the ecosystem, with other, corporations, with other, permissionless blockchains and liquidity layers, like I should just go and do that, right? And I can do that like relatively easily without having to turn my organization into an engineering one if they're not already an engineering organization.
What do you think about a scenario like this? Let's just use Amazon and Walmart, for example. They launch their own tokens. They have their own L2s. They launch their own tokens. Those tokens trade on the open market. They have value, and they form partnerships with, let's say, Starbucks and other retailers who do different things, and I can go spend those tokens there if I want to. Do you think we're headed to that token economy and you have this interoperability and the retailers all are like, hey, I'm going to form a partnership and accept your token and you can use it here and yada, yada?
I think that the token question is a little bit more of a complicated one because there's a question around what does the token represent, right? So, does the token represent like equity in Walmart? Well, okay, like maybe we believe that all equities come on chain. I think there is a portion of the equity markets that will probably continue to be tokenized over time. I think there's real incentives to do that for capital market participants. I think there's a question around the form factor that takes and the legality and the actual owners and the voting mechanisms, et cetera. But in that case, I expect that we will have tokenized equities, but I don't know if I would be shocked if they were able to be permissionlessly traded, right?
Mm.
Now there's the question of like, okay, well, is there like a loyalty mechanism or a stable coin or something like that, which I think is more what you're getting at, for like a Walmart. And I think it's very clear that like there's going to be a Walmart loyalty token, right? Now maybe that is a stable coin, or maybe that is a points token that is like pegged to the US dollar. So it essentially has the ability, or the form factor of a stable coin. That seems very clear to me that like most people are looking at that type of form factor as something that they want to do.
Mm.
Now, the question will be incentives, right? And so, is there an incentive for Walmart to make that open and permissionless, or is there an incentive for them to, make that a walled garden, right? Right now, what happens is, I, get a whatever, some like a Delta mile, right, or some sort of loyalty point,
Yeah.
and now I'm like locked into potentially buying something at Starbucks or wherever, right? But they've already recognized it's already deferred revenue, so it's a liability on the balance sheet when they give me that token, and so actually getting that off balance sheet. And getting that back into the consumer is actually it's an uplift in earnings per share for them. So I actually think that is a clear value add for them in terms of doing like tokenized loyalty. Then the question is like, who do they actually want to interact with, right? Because like, I'm sure Starbucks does not want me to be able to swap my Starbucks point for a Tim Horton point, right? But maybe they're happy to do, some sort of like go to market with like the New York Giants, right? And so I expect there will be, call it open token or somewhat open, at least semi-open, like loyalty type, yeah, tokenized marketplace that will exist. And we're seeing it right now. Like I think FIFA is doing some like World Cup loyalty on Avalanche. And the only place you can actually guarantee a ticket to the World Cup right now is like through their loyalty program that is tokenized and on Avalanche. And so I think we're going to continue to see a lot more of that.
Yeah, that absolutely makes sense. And I'm looking forward to that day when we have this interoperability with the different tokens. And obviously, these companies are going to have to look at the cohorts and the demographics and make sure they all align and so forth. But if I can for example, just using the Amazon example there, if I can get an Amazon token and for holding it, maybe there's some staking or additional discounts that are added, and I can even put it in the open market and sell it, or put it into DeFi, whatever it is, or lend it out. I don't know. I'm just spitballing here, but that would be really cool, and I would be more engaged. Maybe going to Amazon.com more often than I should.
Yeah, listen, no doubt about it. I mean, the vast majority of consumers, even with their loyalty points, you can see some data on this. A lot of people don't use their loyalty points, and so the incentive for someone like an Amazon or someone like a Starbucks is to go and say, "Hey, listen, um, if we're going to give this to you, we want you to do something with it, right? Like we want to have you engage. They don't want to actually give you these points and then have you not do anything and then just sit there for years." And so they're going to want to make ways for this to be usable. And I think they're going to try, and we're going to see a lot of form factors specifically within DeFi to do things like lending that are able to increase the way that people get points. And so I absolutely see that future.
Yeah, it's exciting, and there's so many possibilities. And I think, I don't know if you agree with this, but maybe once the market structure bill, the Clarity Act passes, we're going to see a boom in innovation and companies, looking to get creative with these type of things. But maybe right now they're holding back, waiting for the full clarity.
Yeah, there's the Clarity Act and the Genius Act have been very good in terms of getting people excited. And the board level is saying, hey, listen, we need to have a plan. We need to think about this. That said, they're still a little bit wait and see. Very few people want to be the first mover. They want to see how the regulators act. They want to see how the infrastructure plays, and they want to see how the investors, react to these things. So we've seen some announcements by some big public companies that have come out, and they've been positive or negative for the share prices. That will continue to be a big focus for people. So people have plans. They are focused on thinking about how this future looks, but they don't want to put their traditional business or the rest of their business at risk. And so as they move into the space, it will continue to be kind of step by step, slowly, to make sure it doesn't, have some sort of adverse effect on the rest of what they're doing.
Yeah, that definitely makes sense. Let's segue into Dragonfly. Give an overview of Dragonfly and your guys' approach to investing in the crypto space. Are you investing in token projects as well as companies and things like that?
Yeah, so we invest in both tokens and equity. Early on, the vast majority of investing that we did was mostly focused on things that had value accrual to the token. And why was that? It was because that was where most of the value was being seen in the market. People wanted to invest in those tokens. There wasn't necessarily an ability to accrue as much value to equity. There wasn't, an open IPO market. There wasn't an open M&A market. Um, that has shifted a little bit over time. I think if you look at, the pillars of what has accrued the most value in crypto, those pillars have really been, finance, right? So whether that's CeFi or DeFi, those pillars have been stable coins. And the third pillar is really like the blockchains themselves, right? So if I take those three pillars as the things that are accruing the most value in crypto, there is pretty much an even mix there between a token project and an equity project. Because the stablecoin projects are, some of them have tokens, Athena, we're very large backers of. And that's kind of a mix between a stablecoin and DeFi. But then a lot of the other, large, stablecoin businesses, whether they're payments businesses or issuers themselves, those are equity businesses. And we've seen Circle go public and be well received by the public markets. We've seen, I think we're going to see, more of that. On the finance side, again, DeFi, very protocol driven, very much token driven. But on the CeFi side, the biggest businesses in the world are exchanges, right? Alongside Tether, right? So it's like Tether and then it's Binance, right? Those are the two biggest crypto businesses in the world. And these are businesses that accrue value to the equity, right? And so we've invested in Bybit, which is the second biggest exchange in the world. We've invested in BitGet, which is the fourth biggest exchange in the world. And so we've seen a lot of value, accrue there. And then you have the blockchains themselves. And of course, the blockchains and the protocols, they need tokens for incentive mechanisms, for coordination, for securing the network. And so what we view that is really important in the market is that the business or the protocol knows where the value should accrue they're opinionated about it, and they're focused on that specific, whether it's the token or the equity. And that's where we care about, not necessarily if the form factor is in and of itself a token or equity.
Now, I did notice that you are invested in Polymarket, and there was some very big news this week of the Intercontinental Exchange investing, I believe, about $2 billion in Polymarket. And the Intercontinental Exchange, for those listening and watching who don't know, they're the parent company of the New York Stock Exchange. So it seems like a pretty landmark moment, Rob. What are your thoughts on your initial investment in Polymarket and this news, of course?
Yeah, so I'll start with the initial investment and why we made it and what we were excited about because we've known Shane for a long time since kind of the beginning of Polymarket, and we had looked at prediction markets before that. Obviously Polymarket was not the first. Kalshi was actually started before Polymarket, and there was Augur, famously, it was like more crypto native version that was started before that. But what we saw over a period of time was that while a lot of crypto natives really saw the benefit of, prediction markets, they weren't necessarily being seen, in more mainstream parts of the financial services industry, or, call it, other types of, whether that's consumer businesses or, et cetera. And so we were always a really big fan of Shane and of the idea, but I think we were slower to the uptake than maybe some other firms in terms of thinking, what this could be in the future. Now, fast forward, we continued to stay close. We continued to track. Obviously, Polymarket did quite well during the 2020 election, and people were really excited about it. But then kind of volumes came down again. They obviously famously had the sort of the settlement with the CFTC in 2022, and we continued to see Shane be just maniacally focused on this idea of the markets for everything and having financial markets for all types of things. Um, and I became really impressed with, even during the downturn in 22 and into 23, just how unwavering he was in what this market should look like, where he should be going. That was the point number one. I was like, okay, this is a founder who has an unwavering and maniacal view on how the world should be. And that is something that you see very rare, right? And so that was really impressive for us. But the other thing that really clicked for me in 23 was that we could see Polymarket start to become more social. So
Yeah.
I think it was July of 23 when Sam Altman was fired. You probably remember that as well. He was fired on a Friday, he was rehired on a Monday. And that entire weekend, every text chain that I was on, every group chat that I was in was speculating, is Sam Altman going to be rehired? What is going to happen of the future of OpenAI? But not only were they speculating, with each other and in the conversation, but they were talking about speculating on Polymarket. And actually, that market on Polymarket was, I think, the largest market they had had outside of politics up until that period of time. Then the same thing happened with the around the LK99 room temperature superconductor chip. So for people who don't know that, they came out that there was potentially a superconductor that could be done at room temperature, and nobody really understood. Like, that was a new, novel, really historic thing if that was true, and nobody understood whether that was true or not. And there was a lot of speculation on whether that was actually able to be reproduced. Turns out it wasn't, right? But the same thing happened on Polymarket. And so during those two things, and during me understanding or seeing in my, my group chats and my friend group, that the social aspect of the conversation also became part of the Polymarket conversation, or those two things merging, was when it really clicked for me that the markets for everything, like, now is the time. Shane saw this before I did, and some other investors saw this before we did. But I now clicked for me that I do believe that this is going to happen, and that people are going to start seeing Polymarket as not just a place to make money, but also a place to be social, right?
Mm.
And so it was that time, the end of 23, that us and Founders Fund kind of did this deal into them. That was our first investment into the Founders Fund. Obviously, a guy, Joey Krug, who was one of the founders of Augur, so he had been a believer in prediction markets for a long time. Did that deal because we were really excited about what we saw was we thought was kind of early J curve adoption. Then, of course, in 24, they had this incredible run into the U.S. election. They raised another round right before the U.S. election, which we participated in again. You know, but what was really interesting to see was they, and this had happened in 2020, but it happened in even a more real way this time. They were just the information was more right than the polls. Like, it was clear that, Polymarket and the story around putting money to work to, express a view resulted in a more, accurate information than, something like a poll, and they predicted everything that happened, all 50 states, in the election, right? And so then it clicked again that, okay, all these politicians, all of these journalists were citing Polymarket as, one of the ways of which they should think about, potential outcomes for the election. But then it clicked to that maybe it wasn't just one of the ways, but it was the most accurate way, right? And so, well, again, we invested in that round. And a lot of people, had said, oh, well, like after the election, the prediction markets will go away again, right? Because you had seen it in 2020 and then they picked up again in 24. And I was of the mindset that won't happen in the same way because of what we had talked about in 23. And lo and behold, that's what happened, right? These other business markets, these other crypto markets, these other mention markets, as they call them, they all started to do well, and they continued to do over $1 billion a month of volume, into post-election timeframes. So then Founders Fund did an investment or led an investment out of their growth fund earlier this year at a $1.2 billion valuation, and we participated again because of that. And so we just saw, you know, what was Shane's, vision from the beginning just really to start to take shape in a real way in 23 and kind of accelerate through this year. And it culminated in now this intersection of traditional finance and ICE and the New York Stock Exchange wanting to partner up in a real way with Polymarket, a DeFi first prediction market, a DeFi first financial market, and wanting to build this business in a regulated way in the US as we continued to see that growth. And so, like, listen, it's the culmination of many, many years of hard work and a maniacal focus and ambition from Shane and his team. And we couldn't be more excited for them.
You were mentioning the social aspect, and as you were talking about that, I thought of the blockchain is allowing these social interactions and conversations and even memes, like we're seeing with meme coins, to go on chain, and we're able to financialize it and tokenize it. It's a fascinating concept, like human behavior on the blockchain. So you and I, maybe we met up for coffee and we're talking about who do you think might win this, or who do you think is happening here, and that can go on the blockchain. And if I send you a meme that I think is funny, let's say we knew each other for a long time, and I sent you a meme that can go on chain. It's kind of wild.
Yeah, it's, they talked a little bit on the press release yesterday with ICE, but they talked about tokenization and they talked about data, right? And two of the things that we just talked about, which is, okay, information that you can glean from people putting their money to work is just purely better than things like polls or, other types of information. But then also now what we've said is that basically everything can be turned into a tokenized market, right? And if everything can be turned into a tokenized market, then all of a sudden you have a much more direct way to express viewpoints than you've ever had before, right? A lot of what happens in, financial markets for when people think about, okay, well, I think X is going to happen on the geopolitical stage. And so I have to figure out not just that X will happen and be right about that, but also the second and third order effects to be able to then go express my view and, to make money in the financial markets. That no longer needs to be happening. I can just be right on that X thing, right? I can just be right on, there was a lot of volume this year on like who would be Pope. And you could be expressing view on that and how it happens in financial markets. But now it's just like, okay, I could bet on that directly, right? But then that becomes, and at the same time, where there is a financialization aspect happening to a lot of different parts of our lives, that you and I can now more directly just, interact with each other. But we can interact with each other in those tokenized markets and through the group chats and through, going to get coffee. And it just becomes a much more social way to put money to work or to interact, right? And I think you've kind of seen the beginning of that with sports betting, right? Where like a lot of people now, like they want to, be putting $5 to work while they're also, watching the game. But now, I also can put $5 to work when we're debating any other aspect of life.
Yeah, I was going to ask you about that because, can this be so drilled down or so niche where me and my coworkers, maybe it's just a group of 50 people, can form some sort of polymarket betting group or something on anything that we want?
Essentially, right? So there is, a conversation around like, can you get the right liquidity, and can like the market scale to support like both sides, right? You need market makers or somebody to take the other side of something. But um, if you ask Shane, he believes that there can be a market for anything,
Mm.
and I think within some parameter that is probably true, right? And I think we're going to see a lot more of that, and we're going to see that go, very far down, the niche curve to your point. How far down it goes in the niche curve from a market structure perspective is definitely up for debate.
It's so fascinating, man, what's happening. It's on one hand, it's incredible, but on the other hand, I'm like, are we gonna go nuts, Rob, trading 24/7 with these markets? And, we'll have to find our way, but maybe we'll use AI agents to help us out and things like that.
I think people, I mean, I don't know if your audience is mostly US, but, we're obviously both in the US, right? And I think people in the US kind of don't appreciate just how much like financial or how focused people are on financial markets, like in Asia, right?
Mm.
And so, like, trading being a part of like daily life in like Korea and in Japan and in parts of Asia is like actually very common, right? And it coming to the US, um, like, with Robinhood and with, kind of more democratizing access to those financial markets, like that is a relatively recent phenomenon here, but it is a part of life in more digital first economies. I mean, Asia was much more digital than the US was for many years. That's been how it's evolved. And so I expect that's how it'll evolve here as well. And the key is to do it in a way that is like healthy for everybody and that allows for good habits to exist. But I think, allowing for interaction with, all types of markets across all types of, different aspects, like that is clearly net better than not having that.
Yeah, absolutely. Rob, I know we're coming up on time, so I wanted to ask you about what are some interesting investment trends you're seeing from the fund point of view, right? From the outside, I'm seeing digital asset treasury companies, ETFs, and tokenization, and much more. But are you guys looking at those things? Maybe you can't give away your secret sauce, but what are some things you're seeing, as far as future trends?
Yeah, I think in the markets this year, the focus has really been on a couple things. So it's actually been on prediction markets. So, we've, as I mentioned, been deep Polymarket for a while. And so we continue just to, support Polymarket. But there's been a lot of new prediction markets, whether it's niche or, more affinity group focused, that have raised a lot of capital this year. There's also been a large focus on stablecoins, a large focus on tokenization. Genius Act really changed the way that corporates think about stablecoins. So that's continued to be a big focus for us. It's probably our biggest focus over the last couple of years. We continue to still be very focused on DeFi. So, yeah, you'll remember maybe I talked about the pillars, earlier in this conversation. This is starting to sound a lot like, us being continue to be focused on those pillars. We think DeFi is a form factor that makes also like tokenized assets better, right? If I can take a tokenized equity, but then I can do better and easier securities lending on chain on Camino, right? Versus doing it or on Aave or on Morpho versus doing it through my broker. Like, I think that is a better form factor and the thing that people are going to do, right? One of the interesting things you've seen for um, on Coinbase, right? And so, Coinbase is obviously for more crypto natives, but the growth of their non-custodial lending program, like through Morpho, has been tremendous,
Yeah.
right? And I think we're going to see a lot more of this like CeFi to DeFi interaction that's gonna evolve over time. And so that continues to be a big focus for us. And, then we're very focused on really continuing to build out that core infrastructure that allows for payments to actually exist on chain, allows for interoperability between all of these different chains that we've talked about before. That is, I think, very, very important. What we don't get caught up in, frankly, has been a lot of the stuff that we think are more hype focused, right? So things like, AI crypto crossover to date, frankly, has been primarily like meme coins attached to some sort of like, AI agent and, people acting like it's like some new, financial primitive that it doesn't really exist, right? I think the vast majority of the AI crypto projects has just been straight up vaporware. if I'm being honest, right? And people don't even plan on launching like, real projects around it. I think that's been true of a lot of like, call it the social aspects of what people have tried to do in crypto. So I talked about, Polymarket being social. Well, Polymarket is an exchange kind of at its core, but it is also like a social exchange. That's how I think people will do social on crypto rails. I don't think a decentralized social network is necessarily going to work. And because being decentralized is not a product, right? A product is something that like, people want to interact with because they get a better experience. And decentralization doesn't add for that better experience, right? You have to build something that, has a good social graph, has a good interest graph, et cetera, right? And so I say all of that to say, what we continue to be focused on is the things that blockchain does very well, which is the transfer of value, the transfer of money, the transfer of information.
Yeah, great thoughts on point of view on the social network because anecdotally, I have not found any value and I'm not hating, just I don't want to be on the platform because I don't see what the difference is. I could rather be on X or Instagram.
Yep.
There isn't that incentive, there isn't that value. Oh, well, this does something different and I can get this benefit. I just don't see it.
Yeah, I think that's completely right. You have like the reason people interact socially with different social platforms is because it adds a new way to discover something that is like can go viral, a new way to discover information, new way to discover what our friends are doing.
Yes.
So like if you think about the way Instagram evolved, right? You took what was our social graph and you made it into pictures, right? But it was really around interacting with people in my network, right? Like that was what Facebook started, the social graph, but they started the social graph just completely in written form. Instagram has the social graph, but it's completely in picture form. That allowed for, more FOMO to exist and more people to want to, engage with different activities and et cetera because of that. But then when you take the next form factor, which was like TikTok, right? TikTok really reinvented the social graph because it became an interest graph, right? And it became about like, what are everyone that I'm social with? What are they interested in? And does that imply something about how I am interested, right? And the reinventing of the form factor of the type of information that I see and the way I can see information, that is the thing that makes for a better user experience, the things that makes for a better product. What doesn't make for a better product is saying, I'm going to give you Twitter, but it's going to be decentralized.
Yeah. Yeah. Well said. And maybe somebody will come up with something interesting, like you said, that has that new social graph, that has the appeal, the incentive, but it's not there yet.
No,
Okay, okay, Rob, I know I'm keeping you over time, so got some wrap up questions here for you. First, if you could create your own metaverse, what would the theme be?
I am a really big movie buff. And so, like, there are two things I really like. It's financial markets and crypto and movies. And so absolutely would be, like classic movies. That would be the theme.
Nice. Rapid fire questions. Favorite food?
Chicken parmesan.
Favorite musician or band?
My most listened to musician is Kygo. My favorite musician growing up was Blink 182,
Favorite movie?
Boogie Nights.
I didn't expect that one, but I remember that movie. Favorite book?
I'm a big Paul and Thomas Anderson fan. So, like everything that PTA has done. Favorite book, House of Leaves.
And when you're not working at Dragonfly, what are you doing for fun?
So I mentioned movies earlier on the metaverse side, and then I'm a big traveler. So I love to travel everywhere internationally. It's a huge part of. I think it's a huge part of crypto, but it's also a huge part of just being able to understand human nature, and I get a lot of value out of that.
Absolutely. I'm the same way. I love to travel. I love new experiences, meeting new people, new foods, and things like that. So I'm with you there. Rob, absolute pleasure. Appreciate your perspectives and insights. Thank you so much for joining me.
Thanks, Tony. Really appreciate the time.